In today's video, we're going to be having a little bit of a talk on speculation as a tech bubble, and we're going to be looking at Apple and Exxon Mobil. Hello and welcome to another ACY Securities Hot Topics video. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing we're looking at today is really just a bit of a discussion about what this potential for a tech bubble really is. There's been increased reporting about the idea that there is a tech bubble starting to form, and of course we're starting to see some of the warning signs that it might be about to pop. Now we've heard from David Einhorn just last week, or even this week as early as Wednesday, talking about the idea that perhaps September 2nd was the height of the NASDAQ and the height of the S&P 500. Now, the elevated tech stock valuations are starting to flash some of those red signals that might be an indicator for it. They've tumbled the most since June this week. We've also seen rising coronavirus cases, which are threatening the prospects of them having better revenue in 2021, and of course, even in the fourth quarter of this year. We've also had some concerning from some of the companies that are inside there. SAP SE revenues announcement was pretty alarming. They basically said that they were not expecting to have good revenue results in 2021 due to the slow growing economy. We're also seeing that most mega caps, whilst they have been reporting good revenue numbers, aren't satisfying investors. So even though we saw above the expectations and forecasts in the last couple of days, they're not enough to keep investors on it. And we have actually seen a number of stocks drop in value, particularly on the mega cap side. Now, this implies that there are some level of valuation issues going on, and that perhaps it's time that people are starting to look and go, well, maybe these have gotten a little bit expensive for what they really are. We've seen almost all of them rise massive amounts since the beginning of the pandemic, and we've got a slow growing backdrop of an economy behind us. So that doesn't really justify the amount of dollars that it costs per share on some of the big ones like Amazon and Apple and any of the other FANGs, any mega caps that you can think of. Now, moving on from this idea of a tech bubble, we've seen a little bit, but keeping the same theme, Apple shares are down 5.3%. And they've fallen after reports of iPhone sales basically missing some of the forecasts, particularly out of China, where even though the other forecasts have topped, we've seen that the China revenue numbers have slumped by about 29%. So this is indicative of what we're starting to see. We're seeing good numbers on earnings per share. We're seeing good numbers on their general revenues across in the US. We're seeing good numbers for sales elsewhere, but then you get that one that just gives them a little bit of a shy sight, and it gives a little bit of scare factor for some investors out there. Now, looking at Exxon Mobil, we've heard that they're going to be slashing 15% of their workforce by the start of sort of 2022. Now, if that does happen, that means we're going to be seeing layoffs not only in Australia and Europe, but the US, particularly in Houston, and it equates to probably about 1,900 to 2,000 employees at this stage. Now, they're citing the reasons for actually doing layoff is that they're trying to preserve some of their dividends for their shareholders. And of course, we've seen subdued demand for oil, and now we have some increased concerns that oil might not be doing well into the beginning of 2021, particularly with more than 1 million barrels a day being introduced again to the supply side from Libya. We've then also now got resurgence of what I consider to be a second wave of coronavirus now. And so that is increasing the fears and obviously making the possibility of demand destruction all the more likely. So certainly something to think about in the long term. It is related to your oil prices. So watching what Exxon Mobil, Shell, BP and Chevron might be doing with their own companies might give us some indicators as to how some of the other members who are oil producers might actually be thinking as well. Now, moving on for the news ahead of today, there is a lot of yellow rated news. So we've got a lot of stuff that is what we consider to be low impact events, but we do have a couple of things in there that I think are worthwhile to keep an eye on if you're going to trade into the late night session at the end of the week. Now, we have Canadian GDP month over month figures coming out. We also have US personal spending, and that's going to be a good one to keep an eye on to see how the consumer spending is actually traveling along. We've also got Chicago-based Purchasing Managers Index numbers coming out. And the big one that I'm really going to be focusing on is the University of Michigan's consumer sentiment piece a bit later on in the US session tonight. It'll be interesting to see how people are feeling now that there's a new bit of this resurgence of coronavirus and the uncertainty from the election and from stimulus as well. I'm certain that we're likely to see some pretty poor numbers on that front, but you never know. It is a lagging sort of an indicator, so we might find out that it is still happy from last month, but not so much for the next consumer sentiment report that we get. Outside of that, we also have Chinese manufacturing PMIs later in the early hours of the morning. Now, if there's anything from today's video, perhaps on my other videos you'd like to get in contact with me about, please feel free to shoot me an email at talktoal@acy.com. And of course, you're also welcome to hit me up on any of my socials that you can see behind me on the screen now. Now, if you would also not forget to like and subscribe this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.